Two businesses can have the exact same sales, the exact same purchases, yet show completely different profits in QuickBooks Enterprise. Why? It comes down to one hidden setting that could be costing or saving your business thousands. And in the next few minutes, I'll show you exactly how it works. In this video, I'll reveal the one setting that can change your cost of goods sold, your inventory value, and even your taxes, your inventory costing method. We'll look at the two costing methods available in QuickBooks Enterprise, FIFO and Average Cost. You'll see exactly how each one works, learn how to enable FIFO, and find out how your choice can dramatically impact your key financial reports. By the end of this video, you'll know exactly which method works best for your business and why it matters. Most QuickBooks Enterprise users are already using Average Cost, whether they realize it or not. But here's the catch. It might not be the best fit for your business. Average Cost tracks the weighted average cost of all units on hand. Every time you purchase more stock, QuickBooks recalculates a new average cost per unit. With advanced inventory, you can enable FIFO, first in, first out, which assumes the first items purchased are the first items sold. This means your oldest purchase costs are used first when calculating your cost of goods sold. FIFO reflects the actual flow of purchases and is great for tracking inventory movement more precisely with your real pricing. Average Cost, on the other hand, smooths out price swings such as sudden market changes like COVID or tariff price spikes. And here's the big takeaway. Your costing method affects your profit, your taxes, and your inventory value. Let's look at an example. On January 1st, you purchase 100 units at $10 each, which totals $1,000. Then, on January 10th, you purchase another 100 units at $15 each, which totals $1,500. With Average Cost, QuickBooks blends everything into one weighted cost. And the total purchase cost, $1,000 plus $1,500, then you would divide that by 200 units. That will give you $12.50 per unit. With FIFO, the oldest costs go first. From the same example, FIFO assigns $10 per unit for the first 100 units sold, and $15 per unit for the rest. Let's say you sell 50 units using FIFO. QuickBooks takes them all from your January 1st purchase, 50 units at $10 each, for the cost of goods sold of $500. Your remaining inventory is 50 units at $10 and 100 units at $15. As you can see, your costing method directly changes both your COGS of goods sold and your inventory value. In rising prices, FIFO often shows lower cost of goods sold and higher inventory value, while Average Cost keeps numbers more consistent. If this is making sense so far, hit like so more QuickBooks users can find this video, and let me know in the comments section which costing method you're using right now. FIFO is only available with advanced inventory in Platinum and Diamond editions. To enable it, go to Edit, Preferences, select Items and Inventory, click Company Preferences, and check Inventory and Purchase Orders are active. Click Advanced Inventory Settings, go to the FIFO tab, and then choose Use FIFO Starting On, and enter your start date. Pick the first day of a new period to keep reporting clean. Then click OK to save. The Inventory Valuation Summary Report will display different costs based on the method you choose. On the Profit and Loss Report, cost of goods sold can go up or down depending on your method and price changes. For taxes, some industries prefer one method over the other, so always check with your accountant before making a switch. And always test in a backup file before changing your live file. Now you understand the difference between FIFO and average cost in QuickBooks Enterprise and how to enable FIFO if it's right for your business. If you're ready to master inventory in QuickBooks Enterprise once and for all, my Advanced Inventory course walks you through FIFO, lot tracking, barcodes, and more, so you can run reports with total confidence. Start today and get your inventory under control before your next reporting period. If this video helped you, like it, share it with others, and subscribe so you never miss a QuickBooks tip. I'm Rayanne Salter, your QuickBooks Success Partner, and I'll see you in the next video. Thank you.